Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, yesterday we gave you the bull story. Today we're going to talk more about the bearish outlook on things. So let's dive in.
Trade Genius.
All right, Bob, I know you trade the volatility a lot and you have a pretty good grasp on the longer term outlook on that. So tell us what's in store for us as we progress through the end of the year.
Yeah, can you throw that chart up for me, Phil?
Mm-hmm.
So what we have here, Phil, this is from VIX Central, by the way, guys. I encourage you to check it out. You should check this out every day because the market really anymore is a function of volatility and the volatility of volatility and the calendar of volatility, because that's what's driving everything with these derivatives. And what we've had here was, we had VIX of 60 earlier this week, and now we're down to VIX of 14.75 as I'm doing this podcast with Phil. That drove down volatility, and that's one of the reasons why you saw the market just skyrocketing. Now remember, this is just a reporting of the news. It's not a driver of the news. So as they're selling volatility off, you can take more risks. That's really the bottom line. And they look at a lot of these instruments like SVIX and SVXY, UVXY, etc. They actually look at an average of a duration out 30 days on the volatility calendar. And when you have a calendar that's slightly contango, what contango means, if you're looking left to right, is that the volatility costs more or is represented as a higher price over time. That's contango. That is natural and normal for futures because over time you would expect there to be more uncertainty. Okay. And when they do these averages of these calendar trades, they're shorting the front calendar month and they're going long the other calendar month. And as that continues and maintains that way, that's why people make money in SVIX and shorting UVXY, et cetera, et cetera. So that's a good guy. So if you have a slight contango, if you look out December into March, that's a slight contango, okay? And that usually means the market's expecting normal activity. Normal activity for a stock market is to slightly go higher all the time. Everybody, is Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it, and we'd like to see you in the room. Thanks for listening. Now, near term, the August contract ends on Wednesday, so that one goes away on Wednesday. If you look at September, 15.68 to 17.97, that is a 14.6% contango. Okay, this is what's called too much of a good thing, Phil, and this will cause probably some issues next week in the market. So I'm calling for some softness in the market Wednesday, probably into the end of the month. We also have Jackson Hole, and usually the end of August is kind of wonky anyway. And so that's kind of my window of weakness. The volatility guys say potential window of weakness all the way into the September contracts. But, we have Jackson Hole, we have the Fed in between there. And then we go into what's called a backwardation going into the election. So October to November, if this curve holds the same way, is that you're looking at weakness going into the election. So this changes daily, but when you look at it now, that's how investors are positioned. Now, to Phil's case yesterday on liquidity bazooka hits, seasonality hits, the blow off top hits, is that if bad things aren't happening like the investors think they're going to happen, they will take off these hedges. The curve will normalize and the market will explode. But right now, the market is telling me next week into the 1st of September could be weak. And I just have to respect that until that changes. So Phil, that's what I want to kind of get across to people. And the interesting thing about it is that green dotted line, if that stays underneath the blue line, you have a stock like SVIX ETF, they're going to be selling that all day, which means SVIX will go higher. And so it makes a pretty easy trade. We've had a great week of just trading in and out of SVIX. And you can do the same thing with SVXY, or you can buy puts on UVXY. These are great trading vehicles. You should look at those every day. And almost every day you get a trade out of it, except when this thing's in backwardation, then you want to stay away. So anyway, Phil, I'll give you last word if you want to comment. And if not, you guys enjoy the rest of your weekend.
Nope, good stuff, Bob. Guys, let us know your thoughts. What do you think we're going to do into the end of August through September and then into October as we head into the election beginning of November? Let us know your thoughts on that roadmap. As always, check out our stuff over at tradegenius.co, and we'll see you guys on the next video. Thanks, Bob. Take care.
Trade Genius.